Hey everyone, I'm David Jones with The One Group. Thanks for tuning in to today's The One Group Mortgage lesson. Today let's talk about refinances. I'm sure by now you've seen hundreds if not thousands of emails and ads trying to convince you to refinance your mortgage. So let's talk about what exactly that is today. So after you buy your house and obtain your initial mortgage, are you stuck with those terms for the next 15 to 30 years? Not necessarily. You have the option to refinance. Uh, So let's say your credit's improved over the last couple of years, and right now rates are already historically low. So what you thought was a great rate a couple of years ago might be super high now, and might be time to refinance and get more favorable terms. Uh, Also, it's possible that you put yourself into an FHA loan because maybe your income wasn't quite high enough to qualify on a conventional note. Well, now you can refinance out of that FHA loan into a conventional loan, and depending on the value, the loan to value of your property, if it's under 80%, you can get out of that PMI as well. And we'll talk about that in a minute. So, whatever the reason that you have the option to obtain a new mortgage to pay off your old mortgage and get more favorable terms, that's a refinance. There's a couple main reasons. Like I said before, the interest rates are historically low right now. So now's the time to get rid of that old rate and get into a new lower rate. It's going to significantly lower your monthly payments as well as the overall amount you're going to pay for the term of the loan. Second, PMI. PMI is private mortgage insurance, and that's required on conventional loans by the lenders until you reach below an 80% loan to value, and that's the appraised value. Well, right now, house values have shot through the roof, especially here in North Texas. And even if you bought your house last year and you only put 5% down or 10% down, so your loan to value is 90 or 95%. Right now, with how high the values have shot up on these houses, you can probably get yourself out of that PMI, which can save you a couple $100s a month. All we do is get an appraisal done, look at the value. If you're under that 80%, we can get you out of that PMI in less than 30 days. Now, refinances are great, but there are some scenarios when maybe it's just not beneficial. Like, for instance, let's say your interest rate isn't going to go down, or your loan to value isn't going to be below that 80%. It may not be worth the closing cost that you incur to do a refinance, because it's not going to significantly lower your monthly payment or overall payment. A second scenario, maybe if those closing costs are just too high, even if your interest rate's lower, but let's say your closing costs you incur are going to be high. What's the point of paying that closing cost on the back end of your loan if it's not going to lower your payment very much? You want to make sure that it's beneficial to you. Don't let someone talk you into a refinance if you're not ready to do it. So I guess that's it for today. I hope you found this video beneficial and informative. Why don't you like and follow, and we'll get more mortgage lessons out to you from the One Group. Thanks.
This message was brought to you by our very own David Jones. David Jones, the best in the business.